But the stocks which are losing right now are Kotak Mahindra Bank and SBI. Abhishek joins in to tell us why Kotak Mahindra Bank is down 5% and why, despite decent set of numbers, SBI too is down about 1.5%. Abhishek.
Well, to begin with, in SBI, the other income has actually aided in earnings beat versus our poll. And 19-quarter high with respect to write-off actually aided the gross NPA ratio to be one of the lowest that you are seeing in last 10 to 15 years. Take a look at the PNL. The NI is a beat on our poll. PAT, on account of higher forex income as well as treasury gains, has beaten our poll. So 19-quarter high write-off, more than 10,000 crore in this quarter versus less than 2,000 crore in the previous quarter. That's aided the gross NPA ratio. Net interest margin is at 15-quarter low at about 3% versus 3.01% in the previous quarter. The NI growth rate on a YY basis is at just 2.7%, which is one of the lowest that you are seeing in last 5 years or 20 quarters. Return ratios remain weak, 5-quarter low with respect to ROA at close to 1.7% and ROE below the 20% mark. Slippages, they have been stable largely. A 10-quarter low slippage ratio of 0.41%. CASA ratio has improved for them for the first time in last 12 quarters, coming in at close to 40% versus 39.2% in the previous quarter. Now, loan growth has been at 12% YOY, the lowest loan growth rate that you are seeing in last 12 quarters. For Kotak Mahindra Bank, the business momentum on a YOY basis is perhaps one of the weakest that you are seeing in last 3 years. That has led to NI and PAT being below our poll. Both the NI and PAT versus our poll are on the lower side. Deposit growth was at 11.2% YOY, which is one of the lowest that you are seeing in last 11 quarters. Although sequential growth has been one of the best in last 4 quarters, coming in at 5.4% quarter on quarter. Advances growth has been at 13.5% YOY, one of the lowest growth that you are seeing in 15 quarters. That has been impacted by the unsecured portfolio like the microfinance, credit card, as well as the fact that corporate portfolio declined by 4% quarter on quarter. Net interest income growth is at just 5.5% YOY, one of the lowest that you are seeing in last 14 quarters. Now, operating profit growth is really weak, just 0.2% YOY, the lowest growth rate that you are seeing in last 11 quarters. Even the core operating profit, that is the NI plus fees minus OPEX, that's been weak. It has declined by 0.9% YOY, first time decline in 13 quarters, and it has declined by 0.3% sequentially. PAT has declined by more than 14% YOY, the highest decline in last 9 years. Subsidiaries, some of them were really weak. Their PAT declined both YOY and quarter on quarter. That was for Kotak Mahindra Life Insurance as well as Kotak Securities. Asset quality, 3-quarter low gross NP ratio, while cost to income ratio was at 5-quarter high. Let's listen into the management of Kotak Mahindra Bank as to what they had to say about their Q4 FY25 numbers.
So, Abhishek, clearly there's been an easing of liquidity, which is a good thing from our perspective. Private sector demand has still been kind of muted. But we at Kotak have grown average loans at about 18%, kept good pace with deposits. And it's always been our mantra that we will try and go our deposits somewhere between 1.5 to 2 times nominal GDP growth. And we're continuing down that path.
So do you expect the loan growth in FY26 to be around the 15% mark?
So it's difficult to say that. It really, what we said, the way I kind of like to temper it is it within that 1.5 to 2 times GDP growth? That is really a risk appetite statement, right? Because if the economy is going at a certain rate and you're growing too fast, then obviously you're taking too much risk. If you're going too slow, you're losing money on the table. So what we like to do is kind of say, hey, if the economy is growing this way, are we growing in that kind of ballpark?
Well, recently many banks have started to cut their saving deposit rates. Also, the fact that net interest margin has been healthy for all the banks. How do you see the net interest margin trajectory in a declining rate scenario?
So, Abhishek, obviously when repo rates get cut, that puts pressure. Some amount of that pressure is offset by cuts in rates, not only savings, but also in terms of TDs. Of course, TDs take a little bit more time. It's a matter of, fine balancing as to how much you can cut, the speed at which you cut, where you cut, and how you do it. Obviously, NIM management is a very, very important thing for the profitability of a bank.
Any guidance on net interest margin?
So it's hard to, because it depends on how the repo rates kind of move, how often, how many more cuts there are, and what is the quantum of cut. Depending on that, we'll have to respond accordingly.
Well, FY25 for the banking sector as a whole has seen pain in the unsecured portfolio, microfinance or credit cards or personal loans for many of them. How do you see the trajectory with respect to, asset quality panning out for you going ahead?
Yeah, so you're absolutely right. There's been a lot of pain, particularly in microfinance. We've seen a lot of pain. And in microfinance, while I think the industry as well as Kotak has shrunk the book quite dramatically, we brought our book down by about 33% on an average basis year on year. Just on a smaller book, the pain will kind of reduce. But I think it'll take a little bit of time, maybe Q1, Q2, before we start seeing that pain kind of come down. Credit cards, I think, have plateaued and I think will get better. Personal loans are kind of really back down to a very acceptable level of loss rates.
Well, your credit cost for FY25 was around 60 basis point versus 40 basis point in the previous fiscal. How do you see credit cost in FY26?
So, Abhishek, based on the existing book, I think we'll see a better trend. And you can see it in our slippage numbers, right? For the last 2 quarters, our slippage numbers are coming down, which is a clear indication that losses will kind of come down as well. There are other stuff in the horizon, which we'll see how it plays out. But generally, I'm cautiously optimistic that credit costs will be better.
Any upgrade or more details on the digital front that you're planning for the bank?
Oh, definitely. As you know, Abhishek, we've launched the new app for Kotak Bank. We've launched a new app for our 811 customers. We've done a new platform for payments for our corporate customers. So a lot of stuff happening on digital. And that is something which I think we're going to drive really, really hard. Better digital capabilities for our customers and better digital capabilities for our colleagues. That's the thing that we're really going to drive because that's what I believe is how we're going to win.
Right, that's the word coming in from the top brass at Kotak. Just keep an